basket of all the greatest technology stocks in the world and specifically in America. And so you take those two considerations. One, will we continue to print money and inject liquidity into markets at any sign of trouble? Answer is yes, because we've kind of, once you go down this road, you can't go back. All right. And then the second piece is this giant tailwind that's coming to support the technology revolution, this big technology boom that right now we might be in a small AI bubble. But eventually, once the largest players and the serious players and those building genuine companies are starting to come up, they'll replace a lot of the zombie companies in the NASDAQ, and the NASDAQ will continue to climb higher and higher and higher and higher and higher. And so that's the game, y'all. That's why I'm trading NASDAQ. It has so much potential over the next 10 years. It has so much volatility. And the bigger it gets, the more money that's invested in the NASDAQ, the more the market caps of these companies grows. It's just going to give us a lot of, and I think it's going to be a smoother ride too, because I don't know if you guys have ever traded crypto, but I was in crypto very early on from 2015, 2016, 2017. And when you're looking at novel markets, new markets, if it's less than $50 billion as a total market cap, then any big player that puts in an order, you can see the changes on the chart. You can see whales moving the charts. And so the bigger the market gets, as we started to break the 100 billion, got to the 500 billion, and then the market cap for crypto started to break the trillion mark, then things started to get smoother. Okay, because the more, how do I say this? Like the more volatility that there is in the market, the more that these exchanges kind of feel a responsibility, market makers feel a responsibility to create an environment that is smoother and more predictable. And so that's where a lot of the market making happens is they try to smooth out markets. There's a lot of orders coming in at the same time. Instead of putting in the largest orders all at the same time and crashing the market or creating market panic, there's a smoothing system where orders are placed in a very strategic way so that, you know, people feel comfortable investing. No one wants to invest in like the tsunami. You want to have, the wave pool. You want to have a predictable sort of method that you can use. All right. Let's go through updates. Welcome back, everyone. Another live trading stream. If you're watching this on YouTube, drop a like, subscribe, and drop a comment in the live chats. Love to hear from you guys if you have any questions. What are the hot topics you guys want to hear about today relating to markets? Obviously, we have FOMC tomorrow. That's very straightforward. We've talked about that at length on the Sunday Market Outlook. We talked about it at length yesterday. And if you were paying attention, what were my predictions for tomorrow? Don't just give me the rate decision because that's too obvious, but also give me some of the things to watch out for that I mentioned on Sunday and I mentioned yesterday. While you guys load those up, we covered a few trades on the stream on Sunday and yesterday. I just want to go through those real quick. All right. Well, we just broke TP 1, 2, and 3. Congratulations, Chart Addicts members. Bagged up. It's been a great week. Yesterday's trade, just to go through that, we took this. So I was waiting for a deeper retest so that we can get another entry down here around the 930 level. So I put in a tester entry, which is typically a smaller entry that I put in case the market just leaves without us, which it did. I don't feel any of the FOMO. It's more of a psychological trick than it is a pure profitability trick. But you can also get great 2-to-1, 3-to-1 opportunities from those tester entries because typically if the market just leaves the station without you, it's going to move very quickly and it's going to run to TP 2 and 3. So you'll be able to, really take advantage of those moves, even if you're in a small position. Small size, still they add up over time. So yesterday, took the majority of my profits right here, kind of in the middle of that range, and then the market came up to the top of the Asia range, and then beyond. The level where the market reversed, if we look at the sell zone, we look left, this whole area of consolidation before the market whipsawed created a upper bound and a lower bound. That's our support resistance. Here's our discount premium. For the folks that have taken the classes, you know what I'm talking about here. So where did the market reverse from? For sells. Okay, obviously there's liquidity grabs. This is very easy to spot here. Top to bottom, fib. You can guess what level that is. I don't even have to say it out loud. And then the lower bound right here is support. This is where the first trades were taken last week, or sorry, not last week, on Monday. And then below the zone. So then where did the market come back to retest? It came back to grab liquidity at this whole level. We used the Fibonacci to find the retracement level after this massive bullish impulse. And then we ran up to break TP1, break TP2, break TP3. And I have two more take profit levels above this entire weekly range. One of them is sitting about 45 points above current price, and the other one is sitting about 100 points above current price. All right? So continuation model for the CA members would look like this. Body to wick. Makes sense? Put a 1 in the chat, Chart Addicts members, if this makes sense. I don't really have to explain too much. You either get it or you don't. But for the continuation model, put something in the chat if this makes sense. Josh, you got it? Good, good. Noah got it. James says AI is going to be in the next iPhone update. I hope so, because Siri sucks. Like, imagine if Siri was as smart as ChatGPT. I could be like, hey, Siri, how many unread messages do I have right now from this one person? And it'll tell me. Right now, the best I can do is, hey, Siri, set a calendar update for tomorrow, like, which is cool, but bro, I wanted to like book an appointment for me or something. Like, it's been 15 years or something. I don't know. Maybe I'm spoiled. Roman got it. JLP got it. Mike got it. Chris got it. Max got it. Jensen got it. Bianca got it. Ide got it. Two Step got it. Bobby, Daryl, awesome stuff. Even Alexa can book an appointment for you. Yep. And I think that I don't know. I don't know what Apple's thing is. Maybe it's a moral stance they took against AI. Who knows? All right, so just in case you guys are watching at home, if we reject this level right here at the 75, create support. So I'd like to see a wick through and a closure above. If we see that, then the market has a very, very good chance of continuing to those next two targets. If we close below that zone, then there's a chance that we come in for a bit of a deeper retest, probably closer to the 1932 level beyond this zone, and then we continue. Very straightforward stuff. Christine Wright said this was my exact markup. And Christine, why am I not surprised? Christine, when are we doing a podcast together? Let me see who's on this call. We got to do a podcast. Who wants to do a podcast? Because I know that sometimes we reach out to folks. You guys are obviously crushing it in the chat. But a lot of people are reluctant to do a podcast or get on camera and just, chop it up. So is anybody here comfortable or would be willing to step out of their comfort zone to do a student podcast? You don't have to be doing Jensen numbers, people. All right. Look at your own journey and look at your own progress. Everybody in this chat has made tremendous progress from the moment I met you. And so I think it would be very enlightening for people watching at home to talk through some of the things that worked for you, some of the things that didn't work for you, and maybe we can save people some time in their journey. Mike said, I'm always down. Mike, we already got a podcast together, my brother. And you don't get me wrong, bro. I'm down for another one. I'm down for a weekly podcast. But we should just do that for the members, and then we'll do that on the Friday and Saturday sessions so that we can really, really get in detail here and get surgical, because limited on what we can do on the podcast without showing the screens. Max, long overdue. Max, that one is long overdue. That's the first one on the list. Same with you, James. Bobby, we got one, but I'm always down to run another one. Roman, that one was a smash hit. Josh and Roman, I'm pretty sure these were smash hits waiting to happen. Forgot to set an alert. Give me 1 second. This is called personal growth, by the way, because getting distracted, going off, explaining something, talking without setting alerts, dumbest thing that I've done in the past. It's so easy to set an alert if you know exactly what you're waiting for. Now, if you're looking at five different things, then you don't really know where to set the alert and which one's the most important zone to watch for. You have to find your binary zone. Where's the make or break level? This is really how you find stop losses and take profits and things like that, especially stop losses. Where is the make or break zone? Once it breaks this level, the trade is no longer valid. Or once it breaks this level, the trade is valid. And if you can identify that key zone and eliminate everything else, that's really all you need. Now, if you have multiple zones, you don't really know how to rank them hierarchically, whatever, however you say that, then it's going to be pretty tough to feel confident once the alert goes off. Because then when the alert goes off, you have to make a new set of decisions. You open the app and it's like, oh, should I buy it? Should I not buy it? I'm looking at one thing. If it comes down and wicks this zone and then comes through and wicks back above, very good chance that the trade continues to push to the next level and the next level and the next level. All right, so that's what we'll watch for. Got that up. Christine said, LOL, I would be more than happy to do the podcast. Christine, let's set that up. Let's set that up ASAP. Shoot us an email or shoot us a message in the Discord chat. Let's do more in-depth on scaling futures accounts. Well, Jensen, I actually want to add a section about that on the next masterclass. So anyone who's a member who's getting access to the masterclasses, we're gonna do. I want to do like a small section if you're down for that, and then we can also do one on either a Friday or Saturday session, which I think would be dope. I'm down. I haven't done one in over a year, way before I knew the 88.6. Bobby, let's run it up then. We'll do another one ASAP. There we go. So now we got Christine, Max, Mike, Bobby, Jensen. Yeah, we're locked in. Bianca, when are we doing a podcast? I'm looking at the names on the list here. Am I missing something? Yeah, Bobby, it was over a year ago. Damn, I just noticed that. We got Lorenzo, Bobby, Chris, Justin, oh, Big Jacob in the house. Let's go. Lessman, our own Bryce right here. Josh, Mike, Jensen, Luke, Jonathan. Yeah, we got a pretty solid list here. James, I want to do a podcast with you. Roman, I want to do a podcast with you. I want to do a podcast with everybody in here. Sandra, soon come. JLP, soon come. Daryl, soon come. Amanda, soon come. Yeah, I'm gonna miss a few names. People are gonna get mad at me. Basically everybody. TG, Alfonso, I see you guys in here. I probably missed one person's name. They're gonna be like, damn, bro, you're really gonna do me like that? Not intentional. Everyone's stepping out of their comfort zone. I love this, dude. This is what I live for. Let's get it done. Long overdue. Long overdue. Bianca, we gotta do that one first. We'll get that booked up. Yo, look at this. Look how funny this is. Okay, so we got that first rejection at the zone. A lot of people will probably enter right at that level because I'm not trading at the top of this range, by the way. The entries are all down here. We're just sort of watching this for education and the markets are live, so I'll provide some live commentary in between some of the macroeconomic news. But a lot of people are going to be tempted to enter here. Okay, then I think that a real entry would include the grab all the way through the zone to take out all of those traders' stop losses if they have tight stops, and then you get a real move. Ain't no way. That'd be crazy. 1960. My old self would have been thinking sells no cap. I mean, bro, probably the 88.6 if I was to rank this top to bottom. Well, that's probably the 88.6. And then we just had a closure above the 886, so we're just coming back in for the retest. Once you have a closure above previous highs, once the market continues to create low, higher low, higher low, high, higher high, there might be a retest because you know how Elliott waves work. You get one, two, three, four. Well, actually, this was a high right here. Then we had a lower high. So it was wedging. It was basically wedging down. And then we just finally had the wedge breakout. I love wedge breakouts because this is what they teach you. This is why I always roast baby pips, by the way. In case you guys are new on the stream and you see me talk shit about baby pips, if you were to study a baby pips wedge pattern, which I did, I was the guy, right? I had them printed out right next to me on my right next to me on my trading computer. Some of them worked, some of them didn't. But if you were to check like a textbook version of a wedge, just like we saw here, you would have massive expansion, higher low, lower high, higher floor, and then they would expect, a continuation like this. Or if it was a bearish flag or a bearish pennant, it would go like this. In reality, members, you're going to know exactly what I mean when I say this. You're going to have expansion. Okay, so this is phase one, except instead of a box, you have a wedge. And you have push, fake, go. The textbook version would just look like this. You understand? Same pattern. If you're talking about just flat geometry, I guess. But this grab here and this grab here is where everyone loses their money, loses their accounts, margin calls, and all the rest. And so you can spot the pattern, but if you can't execute it, then you're going to lose your monies. Make sense? And that's kind of what happened here. A wedge consists of a series of higher floors, but lower ceilings. So wedge, wedge. Interesting. If I'm drawing this more accurately, it looks like this was the first move out. And this would be the second move. That's why this retest is crucial. If we retest back inside the wedge and then create a higher floor, then that's going to be the continuation. Okay, we don't typically trade wedges. Typically, I prefer flat ranges, but you can use both together to figure out how late you are in a certain cycle. So if you've ever studied Elliott waves, typically markets move in waves of 5, right? So you'll have the start of a trend, this is the 0. You have the first move 1, 2, 3, 4, and 5. So once you have the first impulse, then you have this whole correction, then you have another impulse, and the whole correction, then another aggressive impulse. That's typically where you'll see the retest. And then we start again. So these Elliott waves kind of just helps you track, okay, how late am I in that sequence? So here we have 0, 1, 2, 3, 4, and 5. We're kind of nearing the end of this current sequence, which means that we need to either see a big correction or we need to see a breakout. And so this is kind of just understanding where you are. If you know where you are, you can have a much better guess at where the market's going. All right, so you can use your flat zones, these horizontal levels, This to me is my priority. And then you can also start to wedge price if needed. Okay, but it's the same principles where we're still looking to buy as close to the premium range as possible, or sell as close to the premium range as possible, and buy as close to the discount range as possible. Make sense? Just trap price. Just keep trapping price. The smaller the range, the better. All right, while the market comes in, we did cover this gold trade. Okay, so we had this beautiful kind of double bottom retest below the zone. I mentioned that 60 pip range below the level that the market could play around in before we have an expansion. Then the market pushed all the way up to 2313. Beautiful retest of that daily zone, and then the next bullish impulse. So now we have 0, 1, 2, 3. I want to see a 4, and then 5 on the next expansion, which will probably take us up to the bottom of this range. Okay. Magnet already came out. Super secret magnet indicator. Can't find it. Can't touch it. Can't beat it. Undefeated, undisputed, hands down best indicator in the world. 2360. The magnet has spoken. Not for sale. Everyone's asking for NASDAQ sells and NASDAQ shorts and NASDAQ this. No, no. There might be sells, don't get me wrong. This thing could crash all the way into the ground, and that's fine. You're not going to find me selling. Right now, I'm waiting for this binary option. I can't say binary options because that's a investing instrument. So I'll say I'm looking for this choice of make or break right here. It's either going to come through the zone, wick back above, and create a new support, in which case this trade is just going to keep running, or it's going to come down and close below the zone, in which case, very good chance we see a retest and continuation down. Right? So I'm not going to be selling it if it's going to go down. I'll just be waiting for a discounted entry so I can buy it back up. All right, cool, cool, cool. Cool, cool, cool. Anybody have any questions relating to market news? Anything that's on y'all's radar? All my attention is going to be on Fed meeting tomorrow, and specifically related to global Fed policy. I'm not global Fed policy, but how Federal Reserve policy is impacting the global landscape between central bank cooperation, and how the divergences between the different central bank policies is going to be impacting the different economies. So I think that the European Central Bank and Bank of Canada front running the Fed has to be addressed. And obviously it's being addressed in the back rooms. But I'm going to expect at least 2, 3 hard questions tomorrow during the press conference to Jerome Powell about, because look, that's been one of my focuses. Even in the last Fed meeting, I told you guys the global impact of Fed policy is going to be a bigger target right now than domestic. Because domestically, we actually have a pretty stable economic landscape. But as soon as you start doing interest rate differentials, meaning that some central banks are doing something and other central banks are doing the complete opposite, and that's going to mess up the trade of currency, the trade of imports and exports between the nations, and create some not just economic tensions, but now it's going to become political tensions between those countries. I don't know if this is the best time for that. Should we be contentious with Europe right now? Or should they be contentious with us? Let me actually put it that way. Right? Probably not a good idea. So I think that, and even the Bank of Canada, do they really want to force the Fed's hand? Because the Fed doesn't have to be forced to do anything. We really could screw everybody over at any moment by just being selfish with our central bank with our monetary policy. And so even though they are desperate and they have to lower rates to try to stimulate their economy, we don't. And we can continue to squeeze by having higher interest rates, and then we can do certain political things to incentivize the other leading G7 countries to to keep their interest rates high. So I don't think they won't beef with the Fed, long story short. I think Jerome Powell has to address this tomorrow. And if he doesn't, this is going to be a giant question mark going into the next few Fed meetings. Mm, what a beautiful rejection. I was reading an article about the upcoming pandemic. I mean, there's a serious problem here where if there is a bioweapon, and I'm just going to say this honestly, if there's a bioweapon that comes out that is as contagious as COVID, but as deadly as something like Ebola, and we have a similar response to the one that, because now there's a massive distrust for the scientific community, there's a massive distrust for government officials, there's a massive distrust for a totalitarian decision-making framework of everybody has to follow this strict guideline of XYZ. So I think that the pandemic sort of bifurcated the country even more, the first one, to show what the genuine response would be. If we have a virus that's deadly and that's as contagious as COVID, yeah, we're all fucked. Like we're dead, right? And so I don't know if like it was a learning moment for everyone how COVID happened because if there's folks that are developing whatever, or if something else leaks again, but it's way more dangerous, then I think that the response to this one and how badly it was handled by the government, how badly it was handled by people, how badly it was handled by the scientific community with not having consensus, ruined the credibility of authorities to be able to guide the future pandemics. And if it's genuinely dangerous and we do have a playbook for it and people don't listen, we're gonna be pretty fucked. Let's just be real. So that's my take. The biggest lessons for me throughout all of life is that it's always about personal responsibility. It's always on us. I can sit here and blame Fauci. I can sit here and blame whatever. I can blame the next door neighbor for not wearing a mask, whatever. Dude, it's on us. Okay. If you had comorbidities, you were more likely to be at risk during that period. So, like, what have you been doing in the past 2, 3 years once that reality set in? Have you been changing your lifestyle to the point where, and I know a lot of people have. I've seen a lot of people stop drinking. I've seen a lot of people stop smoking because they realize that having these comorbidities that are caused by lifestyle choices could impact your chances of surviving something that's very survivable, right? And so that's one thing that we can control. The next thing is like, okay, if I genuinely believe that this thing is dangerous, I don't have to go to the parties, the stores, the whatever it might be. I have the grocery stores, these are mandatory. So you have to have like what can we control? I can't control whatever happens next. Biden, Trump wins. I don't give a fuck, to be honest with you. I stopped caring a long time ago because regardless, it's going to be I'm going to have to adapt. Whatever the tax system is, if they're going to incentivize real estate and investing versus labor, then that's why I'm an investor. That's why I'm a trader, because I'd much rather be taxed as an investor than as a laborer, because that's what the tax code is incentivizing. We have a change in regime, and then there is a new tax code that's incentivizing other actions, then all rational actors in the capitalistic system will do whatever they're incentivized to do. Humans do whatever the incentives are. So, yeah, man, it's all personal responsibility. It's not survival of the fittest as much because that is a big component. But if you really read Darwin's work, it's the survival of the most adaptable. He didn't say the fittest of the species survives. He says the most adaptable of the species is the one that survives. So you have to be flexible. Don't ever get too caught up in how things are or how you think things are to where you're missing where things might be going. You understand? That's why I'm a big proponent of anxiety. You know, I used to have a big problem with anxiety. It used to kind of I used to worry about the anxiety, right? And that was the problem. Like anxiety is not the problem. Being anxious about anxiety is the problem. It's okay to be worried, but worrying about being worried is the problem. You guys get what I'm trying to say? The natural reaction is natural. It's instinctual. Having a higher sense of anxiety, especially doing, let's say, high stress activities like trading. All right. So you'd be like, oh, I'm very anxious when I'm trading. Maybe I'm just not good enough. Maybe I'm just not whatever. Well, if you're putting money on the line and you feel nothing and your pulse doesn't change one bit, you're either completely sociopathic, but even sociopaths, I think, um, have this sort of adrenaline response with gambling and things like that to where you still feel some. If you don't feel nothing at all, I just don't think that you either beat the game completely, or I think that you're still kind of in the developing stages where you may not understand the real risk that you're playing in. Okay. So anxiety, very important. If you look at the top performers in the world, and the top agencies in the world, and the top intelligence services in the world, they recruit for some level of anxiety. You guys understand what I'm getting at here? Because if you don't have at least a healthy level of anxiety, you're not really keeping your eyes open to things that are not currently in your purview. That's not currently on your plate. Now there's a balance between, or there's a difference between paranoia and anxiety. Okay, anxiety is worrying about things that are genuinely possible. You understand the spectrum of probabilities, and you understand that these top three or four things that could happen, are a reality. And so you sort of, I want to say, prepare for them in a, I don't say in an irrational way, because technically it is rational to cover your bases. So you cover those. Paranoia is just more about worrying about things that just are very low probability. So if 1,000 things can happen, all of us turn into monkeys right now. That's a possibility. A meteor hits. We all, a new ice age happens. Or I end the stream in about 5 to 10 minutes. I say happy and safe trading, peace at the end of the stream, and then I X out of everything. I check in with the team on Discord. We, high five it up for making money, and then we go about our day. Now, out of the spectrum of possibilities, I guess they're all technically possible, but which ones are probable? I'd say the top two, three things, which is I stay here for 20 minutes, I stay here for 10 minutes, or I stay here for 5 minutes. You understand? And so a paranoia is about worrying about those probabilities at the bottom of the list, right? We could all turn into monkeys. Uh, it's possible, but not probable and not likely. You understand what I'm getting at? Now, anxiety is I understand that we can end in 5, 10, 15 minutes, but I'm not out of this trade yet. And I want Roy to stay on for 10 more minutes because I want him to, kind of monitor this trade while we're running it. So now you understand the possibilities, the probabilities, and this is a genuine risk to you and your account. And so that's why you would feel a genuine sense of anxiety. Do you guys understand? Is this going over? I know this is not typically what we cover, but I think psychology is one of my favorite concepts, and this is really how the mind works. And the more you know about how the mind works, the more in control you are, especially during high stress activities like trading. Said that one hit. Neuroplasticity is key. You can develop new patterns in your brain. Of course, it's like a train. A train's going this way. This is your thought process. You have a train of thought where you have these nodes in your brain. These You have neurological signals being sent through these neurons, and these neurons are sort of like an energy generator that will help take ideas and synthesize different ideas from different parts of your brain into a train of thought. And so if you've already programmed yourself to be like, I lose a trade, I'm the worst trader in the world, trigger the emotional response of every losing day I've ever had in my life and pack it all into one emotional response. I suck as a trader, maybe I shouldn't be trading. That's the cycle of loops. So imagine that you're conscious of this now, and so you derail it like a train. And so over here, when you say, I suck, I'll never figure this out, maybe trading isn't for me, rewire it to say, the trading is for me because I'm willing to do whatever it takes to improve. I'm willing to review every single trade and turn no loss or turn every loss into a lesson and turn every win into a lesson. And so every time you get to this thought process and you get to this point of maybe I should quit trading, you rewire this manually. And so once you rewire it manually, then this becomes the most efficient path for the thought process to go to. And our nature follows the path of least resistance. So at first you have to use willpower to manually shift the thought process into the new stream, and then eventually it becomes a neuroplastic sort of habitual response. Guys, this is making sense? I really feel like I'm kind of going a bit too, I don't know. Is this making sense? So thinking requires a lot of discipline. Of course, you got to have your passcode up at all times, bro. Cannot allow whatever to just get in to your mental factory. You have to have the passcode up at all times. You got to earn the right to get in here. I learned lots in this channel. Thanks, bro, for all. Awesome. Said hopefully we'll have enough toilet paper in the next crash. Yeah, we'll be good. If you're in drawdown and funded, what's the mindset I'm supposed to carry? The mindset is two parts. One is the math. Okay. So how much are you down in percents? How much do you have to risk? And how many trades do you have to win to make up for that loss? Because the natural response is either going to be, okay, fuck it, throw the whole account away. because I'm down so much, there's no hope, or get very aggressive and just try to make it up out of the mud. These are instinctual responses because we don't want to be in drawdown, and the sooner we get out, the better. Correct? So what I would like from you is to really figure out, like, if you're risking 0.5% to make 1% per trade, or to make 0.5%. So you're risking $500 to make $500. How many of those before you get back to whole? Okay. Now the second piece is psychological. So number one, you can't use the same risk that got you in trouble to get you out of trouble. The lower your account gets, after every loss that I take, I reduce my risk. That's why I stop myself from getting in a hole. Excuse me. So build up slowly, one day at a time and one trade at a time. There is no, oh, this could be the one, because your brain's going to keep playing that trick on you where every trade looks like it could be the one opportunity to make it all back in one go. There is no one. Write that on top of all your notes, right? Every time your brain tells you this is the one, right? You know that you're fucked. You know you should walk away. There is no one in trading. Now, if you follow your plan, you're disciplined, then you catch trades like yesterday and trades like today, and they really do act like the one. But if you're chasing a trade hoping it's going to be a home run, that's how you end up in trouble. So don't look for home runs, one day at a time, one trade at a time, and you can't over leverage yourself out of a problem that over leverage got you in. You cannot over leverage yourself out of a problem that over leverage got you in the first place. Make sense, Alpha? Napoleon Hill was right when he wrote Think and Grow Rich. Napoleon Hill was spot on, brother. And so was Mark Douglas when he wrote Trading in the Zone. I've never heard a more accurate description of the performance mindset. Give me 1 second, guys. Um, 1 sec. All right, I'll be right back, everybody. And we're gonna wrap up the stream. Actually, might as well let's wrap up the stream. Happy and safe trading, yo. We crushed it today. Didn't really, we kind of showed up a little bit late. The Chart Addicts members, they were crushing it in the chats this morning. And I want to give a shout out to everybody here. All right. I want to give a shout out to everybody here for calling out these trades this morning, because I took a bit of an early entry, but the members had all the right markups. So I was able to basically go through, look at what everyone else was seeing, get a quick reset, and take the same trades. So shout out to you guys for sending me the trade today. Appreciate y'all. Appreciate y'all for showing up. Happy safe trading. Please drop a like and subscribe on the way out. We have 23 likes and 70 people watching. It would mean the world if you guys just drop that quick like button. It takes a second. And appreciate you guys for hopping on. Take it easy. Peace. Is this George or is this TG?